Amazon's stock price went down 5% yesterday, 15% in the past month, and it is down 42% from its all-time high. For me, this seems like the perfect time to analyze Amazon's stock. We will first take a look at the company and its segments, and then try to come up with a fair value by calculating an internal rate of return. But first of all, please take a look at the disclaimer. In the first investor letter of Amazon, Jeff Bezos said, "We will continue to make investment decisions in light of long-term market leadership considerations rather than short-term profitability considerations or short-term Wall Street reactions." But the tone has changed. Currently, Amazon is trimming a lot of cost-intensive ventures, and they also announced a hiring freeze for corporate roles in its retail business. This is very important because of two things. First of all, Amazon belongs to the world's biggest research and development spenders, so there's a huge hidden earnings potential if they start to optimize their efficiency of their research and development. They also more than doubled their number of employees in the past years, from 650,000 in 2018 to 1.6 million employees last year. They already reduced their headcount by 99,000 people to 1.5 million employees at the end of the second quarter. It's great to see that Amazon starts caring about increasing their margin, because this is often a time when the earnings of a company start to explode. Let's also take a look at Amazon's revenue segments. You can see online stores are the biggest part of the revenue stream, but this part of the business has a low margin. Amazon Web Services seems very small, but they account for most of Amazon's profits. Subscription services, with Amazon Prime for example, are also a very important income stream. And I also like to see that Amazon keeps opening physical stores. Therefore, Amazon's income streams are way more diversified than most people think. It's not just an e-commerce company. One could even argue that it's a cloud company. Because, as you can see, AWS is the leader in the 180 billion cloud market. And in the last quarter, they still had a year-over-year net sales growth of 33% with Amazon Web Services. We can also see that Amazon continues to outpace Google and Facebook when it comes to ad revenue growth. They draw their ad revenue mostly from charging companies to promote their products on Amazon's online marketplace as well as streaming platforms. In the last quarter, the advertising services grew with 21% year over year. So, while the online stores' net sales remained flat year over year, their segments with a high margin kept growing at a fast rate. If you like this analysis so far and want to see more stock analysis videos, I would be very happy if you leave a like and subscribe to the channel. Now that we have an understanding of what is going on in this company, we can take a look at the financials. It is currently trading at a PE ratio of 97 and at a forward PE ratio of 47, which at first seems very high. The market cap is $1 trillion and they don't pay a dividend yet. If we look at the last 14 years, we can see that revenue per share has increased every year, which is fantastic to see. They did an amazing job at Amazon. We always want to have top-line revenue growth. Earnings and free cash flow also kept growing, but they are more volatile, and in 2021 the free cash flow went negative. Revenue grew with an annual growth rate of 27.7% in the last 5 years. Cash flow and earnings aren't in line, as cash flow grew 14% and earnings 97%. For our future growth estimations, we will use analysts' estimates till 2024 and then decrease the growth rate over time as things get more uncertain. We can see the number of shares has increased a little bit over the last years, but I expect shares to remain flat in the coming years. Analysts expect revenue growth to slow down for this year, but then start to accelerate to 15% year over year. Analysts also expect free cash flow to stay negative in 2022, but then get back up to previous levels in 2023 and then get to a record high in 2024, which seems reasonable to me. Let's take a look at the normal case scenario. As we have just seen, analysts expect Amazon to grow its revenue with around 15% in the future. We have also seen that there's a high probability that their margins will expand, as the low-margin e-commerce business is expected to grow slower, and their cloud and advertising businesses keep growing at a double-digit rate. Therefore, it is reasonable to expect free cash flow to grow faster than revenue. which is often the case when growth companies start to grow a little bit slower. In our normal case, we already get an internal rate of return of 15.3%, which definitely is a market-beating return, and our growth estimates aren't too high. In our best case scenario, I believe that the cloud business Amazon Web Services gets more and more important. It has been growing 33% year over year in the past quarter, and analysts believe that the whole cloud market will keep growing fast until 2030. If Amazon stays the market leader and they get more and more efficient, while their investments in renewable energies pay off, they can definitely grow their free cash flow faster than their revenue. I'm still decreasing the free cash flow growth over time as things get more and more uncertain. In this case, we would get an internal rate of return of 18%. Let's get to the worst case scenario. In my opinion, this is the most important scenario, as I really care about the risk and reward of an investment. Analysts expect revenue to grow at 15% in the future. It is very conservative to say that this will decrease with 1 percentage point year over year. And it's also very conservative to say that free cash flow grows in line with revenue. But in this case, we would still get an internal rate of return of 8.3%. That is something I really like to see because I like the risk and reward of Amazon at this stock price. If we combine our scenarios, we get an expected annualized return of 14.8%. If the stock price increases, it gets less attractive, but right now I personally am a buyer of the stock. I already own shares of Amazon and will continue to add more if the stock price drops. This has been a valuation of Amazon. Thank you for staying till the end and see you in the next one.